Hi guys. So today we're going to discuss accounting for retainers in QuickBooks. Now there's a lot to discuss actually about retainers slash trust funds for law firms. So we're going to do it in few parts. It's not going to be just one video. I'm going to make like few videos on it. So let's start talking about retainers first, and then we'll discuss the accounting for the same. So first, what is a retainer? A retainer is a payment received from clients for the services you are going to provide at a later date. So retainers basically is the money that your clients have given you in advance, and you're going to be providing services against that advance money later and offsetting the invoices with that money. Okay, so retainers could be different types of retainers. First one is general retainers. So these are the retainers which you receive from a client to help them with any matter that your law firm can help them with. There's no specific matter that these retainers are attached to. Okay, number two are specific retainers. These are the retainers you receive from clients for very specific matters. So if you're helping them with like three different matters, these retainers are specific to a particular matter that you're going to help the clients with. So you have to track them accordingly. Number three are evergreen retainers. Now, these are the retainers where you have a agreement with client that at any given time a client has to maintain a certain amount in the retainer account with you. In this type of retainer, client is continuously replenishing its account with you. It's also called replenishing retainer. So these are all the type of retainers there are. Now let's talk about what kind of QuickBooks setup you need for tracking these retainers and what the purpose of those accounts or items that you're going to set up in QuickBooks is. Okay, so first one is going to be a separate bank account in your chart of accounts. So when you receive these retainers from clients, you are putting them in a separate bank account. Now that bank account has to be created in QuickBooks as well in your chart of accounts. So that's first that you need separate bank account created in chart of accounts where you're going to track all the trust money. Okay. Second is the liability account. You can call it funds held in trust or trust fund liability or client retainers, however you would like to name it. Purpose of this account is to track what is owed to each client at any given time. Okay. Number three is going to be a retainer item that points to a liability account that we just created, the funds held in trust liability account we just created. The purpose of this item called retainer is for you to be able to use this item on the invoices when you send the invoices to clients for retainers. Okay. Number four is item named legal fees. That points to legal fees income account on your P&L. Purpose of this item is to create invoices in QuickBooks and post them to legal fees. When you earn that retainer money, you have to bill it as legal fees. And we'll talk about the details of how all this accounting is done in one of the following videos. So this is all we have for this video. So we discussed what is retainer, what type of retainers there are, and what kind of accounts or items you need in QuickBooks to be able to track retainers appropriately. Okay, we'll see you in the next video. Thank you.